Welcome to Odds and Ends, a StockOdds podcast. We're here trying to get ready for the week ahead. I'm Dave Singh here with Rob Friesen. Good evening, Rob.
Good evening. Still no music. We're not circling back to that branding, are we?
I was a one-hit wonder with my little jingle there.
Well, keep looking. We need a good little jingle.
Maybe once the markets calm down, we have time to focus on that kind of minutia, right?
So hope you, Dave, and all those in Radio Land took good care of their mamas today.
We did. We did like a 2-day Mother's Day.
Oh, you had a 2-day weekend with mothers, eh? Okay. Yeah. Well, that's good.
Couple generations, 2 grandmas and the wife.
You can always tell a good person if they love their mama, eh? All right. So we got another busy week ahead of us. It's going to be interesting on the follow through from the sell-off last week. So why don't you review how did things end, both on the sort of sector side as well as maybe the small caps versus large caps, anything like that?
Well, I mean, last week we had some big movements. So, I mean, midweek we had the FOMC, so like 1,000 points up, 1,000 points down. But for the entire week, like even the Qs were barely, on the week, down 1.28%. So it seems like such a dramatic week and such a big sell-off, but we were only down 1.28% on the NASDAQ and minus 0.16% on the SPDR. So
right.
I think between the media and all the hoopla and the giant moves, there's a lot of hysteria, but we really haven't done much damage during the week. So that's one thing to observe. And then also, we have some groups that just really did well on the week and did poorly. Again, energy is the leader for the past week, up 7.41%, where consumer cyclical was down minus 3.89, right? So we have quite a divergence between the best sectors and the worst sectors. And I think there's just a lot of emotion and a lot of chatter and hysteria. We really haven't done much on the downside or upside in the past week, just slightly down.
Okay. On the earnings schedule coming up this week, starting tomorrow pre-market, we have BioNTech, that's BNTX. So that might affect Pfizer, Moderna, and some of the others as well. You know, you do get sympathy plays sometimes. Planeteer Technologies, we have Tyson Foods, and then we also have AMC after the bell, and SPG, Simon Group Properties, and we've got Facebook, Meta Platforms as it is now. I keep calling things by their old names. Then we have wholesale inventories and sales and employment trends. Tuesday, we get into Fox Corp, and we have Hyatt, Peloton, Planet Fitness, Cisco Corp, which is SYY, and that's before the market. After the bell, we have Electronic Arts, EA, Oxy Petroleum, Roblox, and Sophie. There's others too. I'm not covering everything, but. And then Wednesday pre-market, we have Wendy's, Beyond Meat, Bumble, Rivian. I think Ford is talking about cutting some of its Rivian holdings, right?
Yeah, I heard that.
Yeah, and Disney. And then we got ZipRecruiter, and then Google is after the market. Alphabet Inc. Then we have Thursday pre-market, we have Six Flags. See how that's doing with the discretionary spending availability, right? And we got WeWork. That's funny. Poshmark. And then we have Microsoft after the bell. And then Friday, we have consumer sentiment. There'll be some other things along the way, but we just rattle off a few things here for you guys. We have PPI on Thursday as well, right? And then we have CPI on Wednesday. And then federal budget deficit, weekly mortgage applications. So those are on Wednesday as well. So that looks like the hump in the middle of the week there with some more important, like CPI is pretty important, and then followed by PPI on Thursday. Okay, I got to rattle off some futures things here. So when I look at the daily on the Dow Jones Futures, we are sitting probably the best out of the four horsemen here, because we're kind of sitting right on the spike down that we had, which was a reversal day. We reversed the whole thing on May the 2nd. You remember that? We went down and we kind of reversed all. And then, of course, we launched up from there and then all the way back down. So it's sitting right on that level. And if we break that, we still get to go back to another low, which was March the 8th, and then the lower low below that, which was February 24th. So we've got more numbers here on the Dow futures. When we get into the S&P 500, we've only got the low that we had on May 2nd. We're still sitting just above that. And when we go to the NASDAQ 100, we've already taken out May 2nd low. And we're quite a bit below that now. And when I flip over to the weekly, it's air pocket down to March the 5th low, which was March of 2021, March 5th, 2021. So a year ago.
Yeah.
So that's a pretty big number, actually. I'll rattle that off. Well, this is the NASDAQ 100 futures, so you probably need to go to the Qs. Just go back and look at March the 5th.
Yeah, it's like NASDAQ 12,182 kind of.
Yeah, exactly. So, and then, if that doesn't hold, I mean, the air pocket just continues, right? So when we go to the Russell, we look at the Russell on the daily, it's already taken out. The whole month of May was pretty much taking out numbers anyway on the Russell. And that's a pretty sad performer. And considering usually between May and October, small caps do worse anyway. But when you've been looking at some of your baskets, you notice how if you can select really good candidates in the Russell 2000, they give you some good bang for your buck, right?
Yeah.
It's just the problem of, what do you select? So you gotta find the best in breed for sure. It's a little bit of a hunting thing, but StockOdds can help you with the Russell 2000, that's for sure. So that's, we just don't have, I have to go to the weekly, and we have two areas of former resistance to test as we come down to that. Maybe it might be new support. One was from September of 2018, and the other is just before we fell off the cliff in 2020. So we had a couple good numbers in the beginning of the year in 2020, and then of course COVID took us down like crazy. So not a lot of support other than those former resistance areas might be new support.
Yeah.
Okay, and if we go to Euroland, we're starting to break down there too. They have the same problem with March lows, March 7th. Some good testing down there. The DAX as well. We're just starting to take out April support, and we have to go down into March as well.
But the DAX is holding up pretty good compared to us.
Well, it is actually, but there's still troubles ahead. And then the VIX is staying elevated, above 25 up into the 30s. We're at 31.75 right now, up 3.07. So looking at where we are right now, the Dow Jones futures are down 1%, or 334 points. S&P is down 1.03%, or 42.5 points. NASDAQ is down 0.85%, almost 1%, at minus 108 points. Russell is down at 1.12%, 20 points. And the VIX is up, as I said, up 3.04%. So this is how we are now. And of course, things can change for Monday morning, but I'm sensing there's a lot less arguments as we go on, as we have had much of the larger companies in the S&P 500 and NASDAQ 100 already report earnings. So I don't know what kind of new catalysts are on the horizon for us. Tomorrow is Victory Day for Putin and the parade. Whatever he's going to announce, could be of importance, could hurt the market. What else? I mean, we're still, we still have to face the reality that we had a Fed announcement and we popped up and we gave it all back plus, and now we are going to follow through. So, we just don't have the Fed as a backstop to the market, not coming through to rescue us. And even though they took the 75 hike off the table, we've got 2 more 50s to go, and we've already had a little bad taste in our mouth with the first 50, right?
And that 10-year keeps creeping up. We're at 3.14 now.
Yeah, so that's you got to follow, you got to follow the bond traders for sure. They really are much more, I believe, research orientated than equity traders are. So follow the bonds. That's a good tell, and they're doing the work of the Fed for them to some degree. But we still got the hikes, the next 2 meetings, right? Yeah. So the punch bowl has been taken away. People have to come to reality with that. And there's not a lot of new money. I'll give you an example. You might have seen that article that all the retail gains that happened in 2020, 2021, and into the beginning of this year, 2022, all of those gains have been wiped out. They're back to where they were before the pandemic, right? So all of that stimulus money that went into the market, you're not getting more of that.
No.
But at the same time, things are more expensive than they were in 2020. They're more expensive than they were in 2019, and, a lot of people had a lot of things going for them, in the sense of all of the aspects of the stimulus. There was rents, subsidies, or landlords couldn't hike rent, or some people didn't have to pay for a while, or, and it went on and on and on, right? So you add everything together and it is, more reckoning time with the valuations that these markets have had, the speculation that's been there.
But what about the argument on the flip side, right? Like home equity values are really high still. Consumer debt is really low. Like savings are still up. People have more buffer than they did like in the recession in 2008.
Well, they may have the ability to weather the storm until we get back to, interest rates, maybe the next thing that comes along, and they're forced to, start going backwards again. They may be able to weather it until then, but think about the appetite for new speculation. Wouldn't you rather just hold things tight, stay in cash?
The appetite for risk is gone. Like look at Bitcoin. Even after the weekend, it's down again.
Well, that's a good point.
And
you make a very good point. It's down at what, 33,000 or so, 33,000. Yeah. It's broken through the 35, right?
And the ARK funds again, 52-week low on that. So I mean,
look at the dollar too, right? So I mean, the thing is, you should be, if the dollar's strong, you should short metals. The metals are weak, and the dollar it had a little bit of a pause for last week for a bit, and then it's back on making new highs again. Yeah. And look at the commodity-rich countries' currencies; they're sliding back down again. So we're seeing a really strong dollar, and hey, I mean, if people are selling their Bitcoin, which probably is part of the reason it's going down, what would you be taking in its place? If you get rid of all your Bitcoin, what would you grab?
Dollars.
I would say dollars. So it puts a demand on dollars too, right? So it's a very interesting scenario here with these cryptos. Ethereum is actually probably doing worse than Bitcoin, and it's the one that should have more argument for use case because all the apps are built on it, but it's suffering. So yeah, speculation changes when you don't have an accommodative Fed, when you don't have a lot of stimulus money, when things are tightening, rates are rising, lenders are starting to change and hold back. It just changes the flow of money, and it does change the appetite for speculation. I'll give you an example from the top 10 list that we covered on Friday. So one of the stocks had a very high PE multiple, and that's the one stock that was down the most. It was down 4.55%. The other ones were fine, but they had very low PEs. So we're still seeing this, like if I'm thinking about tomorrow, right, which is part of the reason that you and I come together is discuss what are we going to do tomorrow, right? Because the Dow has a lot more support underneath it. We talked about that earlier here. And because they're more defensive and some of those PEs are lower and they're dividend paying, that becomes a smarter choice than going into speculative technology stocks that have high PEs. Now that means that if the market does open down and swings back and people come in and do take risk, you're not going to get paid as well because you're in the more defensive stuff. But if you're short the market, which is still got the FANGs exposure, and you're long more defensive names, then you can actually come out okay even if the market drops a lot. We've had many days where the long list had alpha over the SPY, and then hedged, it had a profitable outcome. So that's my choice for tomorrow is defensive, blue chips, dividend payers, lower PEs. That would be what I would be leaning to. Why don't you go through some of the sector observations and maybe to mid-month seasonality coming up on Thursday?
Yeah, but before you do that, I was looking at the Dow right now, and 11 of the components are still up on the year. So like Chevron, Dow Chemical, Merck, Travelers, Coke, Amgen, Caterpillar, these are still green, even though all the damage we've had this year. So that defensive posture seems
well. That started on the second trading day of the year. Remember me watching the action on being part of the action on the first trading day. And then it was like kind of they bought the small caps. Remember that? And it was kind of like whoa. And so the next day I went more risk on, and it actually it didn't perform very well. And then I analyzed and I thought, wait a minute, they're going after these low PE things and they're selling all the high PE things. So I encourage people to shift to that model of kind of when you're screening, make sure then your choices are better value propositions. And that's overall held up for the year, except for some of those violent rally days where they just want to buy all the NASDAQ stuff again, right?
So you want to do the mid-month seasonality stuff next?
Yeah, sure. Go ahead.
So mid-month seasonality is generally the 9th and 10th business day of the month. That puts us on Thursday and Friday this week. But like we were discussing earlier, there is a caveat. If this week is pretty nasty, that money flow might be pushed over to the next week, which is the next Monday, Tuesday. But either way, there are some symbols that are expected to outperform and underperform the spider, according to the almanac. So the spider is expected to do plus 0.74% during this mid-month seasonality window. And I broke it down to see which ones are expected to outperform and underperform. So the ones that outperform, things like IWM, the small caps, QQQ, financials, the chip stocks, biotech. These are some of the themes that are expected to outperform. And some of the ETFs, specifically like XLB, XLC, expected to really outperform. Energy, financials, industrials, and technology, and especially the SMH. So those are expected to outperform. I think to underperform are staples, utilities, healthcare, and even discretionary. And gold, like you said, the metals, gold is expected to do poorly, and silver relative to the spider. So those are the general themes. And then I was trying to play within, since semiconductors are expected to outperform, I wanted to get more granular and see which stocks within the chip industry might do better and worse. And it's mixed. So what's nice about the almanac is you can actually type in a specific symbol and see how it might do during that window. And you have an example here. NVIDIA expected to do 4.97% during mid-month seasonality, where things like Intel only plus 0.42. So there's lots of pair opportunities or basket opportunities within semiconductors that could be constructed. I think it might be doing that later this week.
See, that's a good way to approach it. If you don't want to pick a direction, you're uncertain, what the ramifications that could be, then go and choose your best ones within the group to be long and the other ones to be short, right?
Yeah. And even some of the big FANG stocks, so things like Apple and Netflix, are expected to do better. But symbols such as Amazon, Microsoft, Facebook, and Google are expected to underperform the spider. So being very stock specific and constructing baskets might be a way to play the almanac, especially when we have such drastic movements back and forth each day and uncertainty out there.
Mm-hmm. Okay. And the thing is, as you approach a seasonality window, you look for the bigger divergence too. So for example, if you have a particular group like the semis and they're already deeply discounted and the window says that they should be long, they should be favored, they should do well, then you have an opportunity to exploit that divergence. Mm-hmm. It could be a situation where actually, the metals happen to be up and the semis happen to be down, and as you go into the window, the reverse is what the almanac says. Well, you got a perfect starting point for both of those. So that's the way to really gain an edge, is look for that divergence.
Yeah.
Okay. All right. Well, let's hit our stuff for tomorrow, and all the best.
Sounds good. Good luck.
Okay. Take care.
Thanks.